Well, just a couple moments ago, we got our new ethanol production numbers for this week. Wanted to take a quick peek at that and get you updated on it. Well, what did production in the U.S. do last week? Well, for the ethanol production, we had 905,000 barrels per day, so we slid backwards yet again. Last week was 933,000. Four-week average is now 949,000 barrels a day. That's down 27,000 from what we had the previous week. Ethanol stocks declined a little bit too, though. 21.1 million barrels, that's down 100,000 barrels from the week before. But a negative would be that we imported 33,000 barrels of ethanol this past week. So kind of a negative report overall for the ethanol. Let's look at our market action. And in the corn market, with our quotes provided by bar chart, boy, we've got all kinds of weakness going on in the grain trade today. December down 9.5. We're at 524 3/4 right now. Soybeans, they're having a tough go too. We have November down 9 3/4, 1282 3/4 on the day. In the wheat market, well, wheat hasn't been left out either, but it's not faring as badly. December Chicago wheat down a couple of cents at 720 1/4 per bushel. Kansas City December now 2.5 lower at 709 1/2, and spring wheat in Minneapolis has December quoted a 1/4 cent lower at 903 1/4. It had been higher, but it has flipped as well. The deferreds are a little higher. Todd Bubba Horwitz joins us now. He's with BubbaTrading.com in Chicago. A lot of weakness to start out the month of September, so it seems like more of the same from August here. Todd, what's going on?
Well, Marlon, actually, I think it's a little bit worse. I think we've actually kind of broken down a little bit in corn and soybeans now. You know, the key levels have been violated, and unfortunately, the charts don't understand that there's been no action and no trading. They're just breaking down, which means that the technical sellers will be in trying to sell this, and of course, which makes sense. And I think we probably have some more room to go on the downside. But I think if we look out into the future, it will be a very bright future. But again, this is the issue in thin markets, but this is also why you should always be hedged against your crops, because this is what can happen out of nowhere. We can break down, and this is what we're seeing right now.
So we have been talking for, gosh, how long? 2-3 months about this wedge formation or coil formation. And it seems like corn and soybeans on the new crop months are violating that here in the last day or so now. That could maybe open up a leg to the downside. If that would be the case, how much downside risk would you be looking for if we're actually maybe putting in an early harvest low? What do you think?
Well, I think we're now in danger of probably, 1260 in soybeans and probably 490 in corn. Now, again, I'm not saying it's going to get there, and but I do think that is now, the door is now open to see some heavy selling, and you tie some potential heavy selling into a thin market that has no volume behind it, and it can happen. That's the real issue that we're dealing with here, Marlon, is the lack of real volume or activity, which does not create new money buyers stepping in, and add the equities in, which continue to explode higher because of cheap money. You've got some issues that could lead to a bigger sell-off than we can expect right at the moment.
Okay, I did want to point out the dollar value right now on the U.S. dollar index. It's actually a little bit weaker as well, down 180 points at 92.455. So that may actually be aiding the grains from being even worse than what they are. Todd, thanks for the comments today. Good to hear from you. Todd Bubba Horwitz at BubbaTrading.com in Chicago. I'll return in just a moment. We'll get you updated on our livestock trade. Take a look at the wholesale pork industry as well.